Hello, everyone. It's Matt Heisler from Vanderbilt Properties, and I'm here with another market report. I'm going to be sending this one out here with Groundhog Day in the rearview mirror. We are starting to talk about the spring market, and even though January doesn't always tell us a whole bunch about the spring market, I sort of feel like we have seen this market before, and so we should be able to make predictions about 2025. So let's talk about what we saw in 2024 with the year in the books. And basically, what we saw is a year that mirrored 2023 in a lot of ways. So, was there some softening? There was, but there wasn't a ton. And for those who watch these market reports regularly, I sort of foreshadowed that I thought the spring would be very frenetic, at least at the beginning, and then it would sort of depend on what happened if a lot of houses came on or not. A lot of houses didn't really come on. I think that it definitely got softer as the year and the summer approached. But the beginning of the spring was absolutely crazy, and people really chased property. I think there are a lot of folks who bought in March and April last year that are pretty disappointed about what they paid. Not that they're probably running out and telling everyone about it, but I felt like there was a lot of panic, and I think that you can see it in a lot of the pricing graphs. If you look in the various towns, that there was this giant spike in the early spring, and then over really the rest of the year, it sort of it kind of pulled back. Um, and that pullback still meant at the end of the year that we were up. And I think that that's probably what's going to happen again this year. Was definitely unusual in terms of how big it was, how aggressive it was. I think that this year that's less likely to happen just because that's not something that we typically see. But I do think that buyers will probably push up prices in the spring, as they often do. And the reason's going to be the same. There just aren't going to be enough houses to go around. And I think 2025 will look a lot like 2024. We're really sort of starting at the same place with a very low inventory market. However, there are some changes. I mean, for the most part, you can see some changes in the fact that days on market has gone up. A ton, no, but a little bit. And I think that there's a lot of stuff out there that is sitting around that maybe in 2023 probably would not have sit around. So we are starting to see a little bit more caution in the market. We're finding that properties that need a lot of work and are in tougher locations, that those are having to do price cuts in order to get down to where buyers are interested in them. But still, everything is selling. I mean, literally almost everything is finding buyers. And that tells you that this market, just like the last couple of years before it, is more constrained by the amount of housing available and not really constrained by interest rates. So I know a lot of people felt like with interest rates where they're at, that housing prices needed to come down. The last 2 years show you that that is not really how it works. It really is about supply and demand. And if you choke off the supply faster than you choke off the demand, because the demand is down, okay? I mean, the interest rates have had an effect on the demand, but they have not had enough of an effect to get it in balance with the amount of supply that's out there. And that is why prices continue to go up. And that is probably what we will see this year. So, and I just have a note in here that prices are probably going to go up, but they may not go up gradually. In fact, we will probably see a repeat at a smaller level of what happened last year. It's hard to know. I actually think that rates are going to come down later this year, and that's when most of the buyers may come in. I don't think that the rates are going to be as attractive for the spring market as they were last year. But that's what we're all trying to figure out here. I think that the biggest, by far, variable is we need to know how many sellers are going to come on the market. And right now, we really don't know. So I think when the year is done, I think what we're going to see is an increase from where we were at last year, which was 39,000 homes. But that's still far, far away from the 10-year run rate, which is 50,000 homes every year. So I mean, we're just way down from that average run rate, and until we really start seeing a lot more houses get listed, it's hard to imagine that the pricing dynamic, which has played out basically since the pandemic, is going to change. Having said that, prices over the last couple of years, in terms of their increases, have definitely moderated. Okay. So buyers shouldn't be too worried about prices going up. I actually think wage gains over the last couple of years in this area have outpaced housing price increases. So the gap, the affordability of housing has gotten better. And on top of that, something I've talked about in the last couple of reports, I actually think the rental market is a lot softer than the MLS data has it. Basically, most of the larger complexes and the mid-sized complexes that I see in my area are all advertising that they have spots available. That's not something we've seen for the last 4 or 5 years where they have been full up. So I have a feeling that there's a lot of shadow inventory out there in the rental market. That gives first-time buyers and with the luxury rental market, a lot of second-time buyers. It gives them flexibility. They don't have to pay market prices and they don't have to borrow money at 7% to find a place to live because the rental market is out there and it's available. So I think that's a pretty interesting dynamic. I think that it's probably going to mean that there's not going to be as much pressure in this spring market as we saw last year. But does that mean it will be a lot less? Does it mean it'll be a little less? Still a little early to find out. I think there's still a lot of folks that can and want to buy a house in this market. And the real question is how many houses are going to be out there for them to buy? So the bottom line here is if you're thinking about 2025 for the market, if you're a seller, you should definitely get out there. I think that the spring and the summer and probably the fall are all going to be good markets. I think the Fed is likely to surprise at some point with an interest rate cut. I think inflation is going to moderate uh, more than people are expecting right now. And when that happens, there could be a significant drop in interest rates, both from a market reaction and from the Fed cutting. Again, that's nobody's really talking about that right now, but it's definitely possible. It's definitely something that could happen. And I actually think it's something that's likely to happen. Uh, and I really, if you're thinking about selling, there's just not going to be a whole ton of competition. There's no evidence to suggest that that competition is out there waiting to come on the market. And so you're going to be able to get great prices, especially if you're downsizing, right? Like, I mean, we should really think about getting out there. I think the strong sellers market, at some point, it is going to tail off and be less strong. If you're looking to downsize, this is probably the best opportunity. Last year was probably the best opportunity. So other than last year, this will probably be the second best opportunity to get into something smaller if you're looking for capital preservation and overall less leverage to the market. I think and overall less leverage to the market, I think this is probably a great year to do that. But I don't think buyers should necessarily be intimidated by the market. Like I said, I think from a wage perspective, I think buyers are in a lot better shape than they have been in the last couple of years. I think prices ultimately they haven't really come in, but at least they've slowed down to the point where I think housing is probably more affordable. Most importantly, though, I think that there are going to be choices. There are going to be some houses that don't sell right away. They probably won't be the perfect houses, but you will be able to get into a lot more houses this year, I suspect, without a super competitive bidding process where maybe it's just you or you and one other person. And if the odds are 50%, that's much better than what we've seen for a lot of situations over the last 3, 4, 5 years. So I think for buyers, I think it's time to start thinking about it because the trend for interest rates, quite frankly, is low. And so if you get that house this year, probably in a year, 18 months, you're going to be able to refinance at a significantly lower rate and it's that will you'll look back at this as a really good time to buy. Whereas if you wait, those interest rate cuts are going to end up resulting in higher prices because it's going to bring more buyers into the market probably faster than it brings sellers. And so I'm not quite as optimistic that that's going to be as good a market as people think it is. So whatever it is that you want to do, this market is functioning fairly normally, and it's probably a pretty good year to get out there. Take care.